All right, welcome everyone. It's Rob. Hope you're having a great day. Let's go ahead and make sure you all can hear me. If you would please go ahead and type the number 1 in the chat box. Let me know that you can. I would truly appreciate it. Very well, thank you for that. Morning, Helen. All right, Andrew, I appreciate it. Thank you, thank you, thank you so much, everybody. Hey, Jim, morning, afternoon. All right, all right. Well, as we get started, keep in mind everything we look at is for education. There we go. Nothing's meant to be advice or recommendations. If you find something like anything, make sure it fits your own personal risk profile and risk tolerance. All right. What a day, what a day, what a day. How bad can it be, right? Our temperatures are warmer than where my wife is right now and my daughter in Myrtle Beach, in South Carolina, not in Myrtle Beach, but in South Carolina. We were 1 degree warmer yesterday than they were in South Carolina. So my wife was not happy. She thought she was getting to go away to a warmer place, but gorgeous day out there today. So hope you're enjoying it. The market maybe not be as gorgeous, but the weather over here in New York is. So as we get going here, guys, we got Inner Circle check-in coming up on the 21st, which is tonight. Quarterly for the Inner Circle is November 1st and 2nd, 10 a.m. to 2 p.m. Mastermind is tomorrow evening. Trading You is on the 24th. Monster Market Move is the following week. Power Hour Trading Coaches Playbook are on the regular schedule, as is Pop, Covered Call, and E-Mini. Now, if you like it, then you should have put a fib on it. Is a brand new training, never done before. I've actually, this weekend, I did a lot of work on the manual. Today alone, I added about 40 pages to the manual of what, not quite 40, maybe 20 pages to the manual of what I'm going to be teaching. So make sure you get registered for that. Andrew, if you could drop that link in there, that would be great. There you go. It's a free training. You got 3 of them coming up, 1 at noon, the other 2 are at 8 p.m. They're all the same training, so you're welcome to come to more than one, but they're the same exact training that we're going to go to in there, right? So it really is, if you haven't figured it out from Fib, it really is a Fibonacci training, how to use them properly and the likes, all right? Here's our followers page. Make sure you're following along and keep up with the latest and greatest. Here is our Trading Boss Manifesto. You can download this on the wealthbuildershq.com site, on robertjroy.com, and on tradinglikeaboss.com. More to come in the future. If you like it, then you should have put a fib on it. It's going to be a lot of fun, folks. I have not done anything since we started Wealth Builders. I've done 1 2-hour premium training on Fibonacci, and that's all I've ever done. Power option plays, we use it very heavily, but then again, it's funny. We did a Trader Super Summit this last Friday, which was our Mastermind Inner Circle group. We do it for those that are in those 2 groups. And we only did it online this year. I was not able to do it live because of my surgery with my knee. And as we're in there, you're hearing people talk about fibs and the notes that they're dropping in and the likes of how much of a difference it's made and how much things like strategy creation system have meant and so forth. So this is really fitting time for me to finally put a fib training together. You will not be disappointed. So make sure you get registered for that. All right. Oh, I don't want to show that one yet. So we'll get back to the topic in a moment. What trades did y'all do today? Drop them in. Let me know what they are. It doesn't matter. Today, the end of last week, whatever it was, that's fine. I got nothing off today, but I wanted to share with you this one sheet right here. And I went ahead and highlighted in orange and in blue the different weeks, right? So you can see where the previous week was. So last week we got 5 trades off. The very first one was AMAT. We lost $201.60 on that trade. Spotify was on the same day. We made $489.60 on Spotify. CDNS, and that was on the 16th. We made $576. That was a great trade. United Healthcare, we made $504. This is the day after their earnings announcement, not on their earnings. And then Humana, HUM, was $363. And I don't know if you add them all up. I mean, 10, 13, and 5 is 18, $1,600 last week, right? If you look at the total since June 25th, we're up 11,975.64. So we basically have had 54 trades that we've taken, right? Right in there, 54. We had 41 winners. That was 75, almost 76%. We had 10 that went against us for 18% of our trades, and 3 of them we bought at 12. We sold at 12, whatever the numbers were, so about 5.5%. our average P&L per trade is $221.77. So without a doubt, the strategy works, folks. And this is tradewithrob.com, right? You can get access to all of the various trade setups that we do in there. All right, click OK on that. Let me see, we got a question in here. All right, so first off, Trader Will did 5 trades, 4 made profit. Great job today, Will. Fantastic. Roman, hey, welcome back, my friend. 35% on the S&P 500, the SPX W.X, which is the dailies. 35% on a bounce. There you go. Brenda said 8.9% on SPY on Thursday. Trader Will said on his 4, he's up a couple $100 so far. Excellent. Good job, everybody. Good job. Really good. Let's see. Jim said, have you noticed fib rules or behaviors have changed a little since you started using them decades ago? Geez, thanks. Since there's a lot more users trading on computers and just not brokers only. And Jim threw a shout out to everybody for their trades. So, it's a very fitting question, Jim. Yeah, there's no doubt that things have changed. And one of the things, I guess because that's what you're looking for, right? That's what I look at, is what's the first thing that's popping in your head? And one of the things that I notice is the reliability of the levels, the right levels, the key levels is becoming so much greater. And maybe it's my trust has gotten better because I'm doing it longer and I just have that much more experience with it. But my faith, my trust in those levels holding or producing a setup that I'm looking for is a better chance of it happening now than it was. So I do recognize that. Are there some levels that are better than others? Of course, the 0.618 is the most important line, right? But I do believe that would be the number one thing I see in there. Also, there was really 2 trades. When I learned how to do this, there was the golden ratio retreat, which is the H pattern. And then there was, I had a problem remembering this the other day and I got it again. Something wiggle, proportion wiggle, dynamic proportion wiggle. No, it's not dynamic. Darn it. Anyway, there was a second trade, and that's all we did. And now I've got 8 or 9 different fib setups that I trade, and about 6 of them that I'm testing right now as well, to see if I can, any of those will work out and we add to it. So there's no question that things have drastically changed from where they were. And I think bottom line really comes down to whether you're using fibs or using MACD or whatever it is that you use, you really have to build a strong faith. One of my favorite movies to think about, and I forget which one it is, I'm sure one of you will remember it, but in Indiana Jones, it's the one where they were looking for the cup of Christ, and it was they're fighting the Nazis, and it was the eternal water that would allow them to live forever, right? And at one point, Indiana Jones was trying to go and find the cup, right? Because his father was shot, and he had to save him with getting some of the water that would keep him alive. And he's going to one of the sections, and it said, you got to take a leap of faith. And it's a very narrow path. It's low. He can't really run back, but it's this big cavern he's got to jump across. And he literally just puts the book from his dad, which has all the notes in it, across his heart. And he closes his eyes and he takes his first step out. And it was awesome. He must have redid it 100 times to get it to look that cool, where he kind of falls a little bit when he, because he doesn't know if he's going to catch his foot on anything or not. And then this path appeared. It was his faith, right? And I really believe that, and I love that. I actually used to use it in one of the trainings I did. But I really do believe that having that kind of faith of, yep, this is going to work. And if it doesn't, I know it's not going to work because it only works 72% of the time, 68% of the time, 94% of the time. I know some will go against me, and I'm okay with that because I've got a series of rules in place that don't let it go against me too much. Can something happen on any trade that you get in trouble much worse than your rules? Sure. Stock closed at $48 yesterday, and today the company comes out and said, the CFO embezzled all the money. We got nothing left. Sorry, we're closing our doors. Okay, your stock is going to zero. And nothing you can do about that. Can that happen? Yes. There's only one way to get around that so that never happens to you. Stop trading. That's all you can do is stop trading. None of them, nothing you can do will ever stop that from happening. Yep, it was, I know, but I got it now. Well, divine proportion wiggle was the name of the trade, the divine proportion wiggle, because we would break out of that zero line and just kind of wiggle away from it. It was a little bit too flaky of a setup. It worked, a good percentage of the time, but too many times it would start to break down and would just wiggle sideways. And that's where the name came from. So we made changes to it. I tested another strategy and I've got now more of a zero line breakout. So, but thank you, Will. Yeah, Will was in our class on Friday as we were talking about that. Jim said, great to know, more strength in fibs, rules / behaviors, greater probability on trades, faith. Thank you. Okay. Good summary, Jim. Very good summary. So yes, all of that, right? So realistically, and again, whether listen, fibs are what I love, man. That's my jam. I love it. There's very few people that can talk to me about it, that can really wow me on it. Very few people in the world that can wow me on fibs, right? But I can keep up with the best of them when it comes to Fibonacci's and the understandings and so forth. And some of the discoveries that I've made on there, like Fibbits and some of the trade setups that I've created and so forth, for me have just been a testament to how powerful that indicator is. Now, do I do it alone? No, I use moving averages. I'll occasionally look at DMI and ADX. Which is really a combination indicator, right? I'll occasionally look at CCI, occasionally. My go-to is my moving averages and my fibs, because if you understand the mechanics behind a Fibonacci line and why it's so powerful, is each of those levels, it's not only is it harmonic to nature, but each of those levels are a psychological level that you don't even know exists, but your brain sees something, you just don't know what it is. And traders just have a tendency to slow down, halt, hesitate at certain levels. I don't care what the stock is. Somebody first want to throw a symbol in there. Try not to make it something that's on pop. Give me a symbol you want me to take a look at. Hopefully it's got something we can put a fib on. And no $10 stocks, please, because it's not really going to do as much. Somebody, anybody? Okay. Let's see. OKLO. OKLO. All right. So, all right, $18 stock, not crazy, right? So we are looking at, it'd be good if I went to a daily chart. Okay, that's better. Oh, why was it? Okay. So, yeah, so there's not a whole lot to work off of here at all. And I'm not going to use what's here on the far right because we don't have anything there. So I'm going to draw Fibonacci historically off of where I would have looked at or considered. Let's see, I need to bring in a little bit. I can't tell if that's the low. Let's see, the low here is 12, 7, 5. Okay, so I've got it. No, it's not true. It's off of this, the first low candle there, right there, that longer bodied candle, right? So, let's take off moving averages and let's bring it back in, okay? Every single line is a hesitation level. Obviously, you can't look at this one because we didn't get down here yet. Excuse me, let me get rid of my crosshairs. Let me start up my drawing tools. Big airplane might have been a better one, Henry. Just because of price, and then Will had asked for MRVL. Let's see, where are my tools? Come on. All right, there we go. I just want to be able to draw, and the drawing tools are terrible on Zoom. Okay, so this was our V top, this is our V bottom down in here, right? And what happened? We moved up. We didn't stop exactly at this line, but we got pretty close to it. That's our hesitation level. We opened right there, stretched up, came down. We wicked off of here, we wicked off of here and here, played there. All of these, garbage in the middle. Oh, but so it doesn't work, Rob. No. Remember, not every stock every day is going to hit or stop at a particular level. I don't mean hit like we blew through it. Like this candle here, as far as I'm concerned, that's a no-go. That wasn't a candle that really did anything for me, right? The day after, absolutely, we stopped there, right? The wick here, the close here, open was right about there. All these 3 days in there, back down in here, back up in here, here, very long term. And now we're well beyond that move. Let's pull it out and see what it did months later. I mean, this was drawn off of May, right? And here we are in October, and we close right there. We open right there. We toyed around with this, not really great. Now the fib has been violated because we got through what would be the 882 there. Okay. And it might need it. Well, let's see. I didn't even check that. Well, I don't have it open. That's why. But Will's saying add the 118 inside of here, and you watch how much more it respects it. One more row. There we go. 8. Okay. Yeah. So perfect. Where sorry I didn't hit anything. Look at this. Wow. Here, 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 here. Not there. Okay. But all of this played on this amazing. Now, I didn't cherry pick it. I didn't know who you were going to ask for. I don't draw fibs on $12 stocks or $18, $20 stock. I don't go that low normally on stocks, right? That I'm looking to trade. So picked out a candidate, drew the fib on it, exactly where it was, and we got exactly what I would expect. Yeah, okay, well, we'll look at on. Don't know if I was actually on the chart when I did it or not. So I've got a fib drawn on there already. And let's bring it in just a little bit bigger. Whatever we can do to see the most. Now remember, all of this doesn't count. Oh, where'd that thing come from? Okay, all of that doesn't count because we hadn't drawn the fib yet. Here, here, here. I guess it decided to change my color. Here, a little bit on this line here. Definitely here and here and here. I mean, guys, look at the gaps. Let's stop at the line. Let's stop at the line. Let's stop at the line. Every single 3 days in a row or whatever, 3 lines in a row. Boom, boom, boom. We go right to it, right? We hesitate on this one, which is the 764, which is a hesitation level. We come back to 618. We play a very long time on 50. Come back to the 614. We kind of blew through right there. So we played around right here quite a bit. A couple of days here, a little bit here, right? So it's over and over and over and over again. And recognizing that, seeing that, knowing that, trusting that is probably the most important thing, right? You've got to get to a point that you believe in what you're doing, right? And that belief has to go beyond, I believe it's going to work. I just don't trust it. It can't just be, yep, I think it works. Or yeah, I see it works for Rob. I don't have the faith in it yet. And that's not an uncommon thing. That you get that it works for somebody, but you really haven't spent the time to figure it out and make it work for you. Okay. All right. Congrats on those that, yep, you get to see fibs at work. That's exactly it, Will. Congrats on those that took the trades. Jim said, if you want to put it in your fib manual or let traders know today, on your, wow. You ready, guys? This is, I'm impressed. Jim said on May 2nd, 2022 Power Hour recording at 22 minutes and 50 seconds, you go over when to redraw the fibs. You're awesome, Jim. He tracks all of it, timestamps everything, right? So May 2nd, 2022 at just shy of 23 minutes mark, 22 minutes and 50 seconds, we go over how to redraw the fibs, right? So that is awesome. That is awesome. It's actually one of the exercises I had planned for Friday's Trader Super Summit. We just never got to it. We were so engrossed with AI. But let me ask you a question. Actually, I'm going to ask you a couple of them. First one is, how many of you have a written trading plan? Give me a 1 for yes or 2 for no. Not an in my head. I don't care how short or how long it is. A written plan. Something that you documented your plan. Okay. Mostly yes. There's a couple of no's, and that's okay. Right now, I distinguish, and maybe you don't, but I do. I distinguish a trading plan separate from the trading system. The trading plan is asking, why do you trade? The trading plan asks, what is your risk profile going to be? What's your risk management technique going to be? In other words, how much is your account? How much are you willing to put into the trade, into one trade from that account? Dollars, contracts, whatever it is. Okay. That's the trading plan. Now, and you may have it may be the same answer for you because I didn't define it properly to start. How many of you have a trading system documented where it's identify, enter, manage, exit? Those 4 key criteria. Yeah. Okay, nice. Yeah, thanks to you. Okay, so one of the things we did this weekend, and this is not available yet, it's something that we're working on right now, and we're going to wait probably a month to get feedback from Inner Circle and Mastermind Group to see what their thoughts are on it. But we put together some AI tools that do it for you. You answer a series of questions and it spits it out. And it's a pretty comprehensive plan of what it spit out. Now, what we did was we trained the AI on me, my trading, my techniques, my strategy, my systems, my fibs, my everything. Okay, we trained it on me. And then you answer these series of questions, and it's going to come back to you after you answer them and say, based on your risk profile of having $5,000 in your account and you're willing to risk $5,000 on one trade, you might be more of an aggressive trader, which could be detrimental in your trading if one trade were to go against you. So you might want to consider having a 2-to-1 or better reward risk ratio, or blah, 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 right? And it'll give you suggestions. Then you go back in and you can retweak it, hit enter. It'll always give you suggestions, by the way. It is AI. It doesn't stop after the 3rd iteration, right? And I don't want it to stop because 5 years from now, you may want to make a slight plan change to your plan, and you can go back and make a small modification and come out with a new plan for you. But it spits out, identify, enter, manage, exit, all the rules, all the components. That's the power of what you can do with AI. But you can't just say, tell me how to identify a stock, tell me how to enter a stock, tell me how to manage a trade, tell me how to exit the trade. You can't do that because there's no context to it, right? Because if I said to most of you in here, do you trade? If I just said to you, do you trade, right? For most of you, the answer would be yes, right? But if I asked my wife's cousin if he trades, he would say yes, but he would be talking about cars because that's what he trades, right? He buys and sells. He trades off cars, and he literally will trade. Give me those 2 for this one here, right? It's like trading cards for him, right? So different people have a different impression of what trade means, right? When you just throw that at AI, they may guess it and go to the most common one, but it could be trading baseball cards, right? So you really have to define exactly what you want in there. We actually went over that a little bit this weekend, again, in TSS, Trader Super Summit. We went over that a bit on Friday, of being able to do that. And I sat down on Friday and wrote 10 prompts for AI to give traders information about trading, right? So those of you that are in our masterminds, you can expect that as soon as we vet all of them diligently, we're going to give all of those to you guys so you can start playing with those, right? And they'll be yours. There's no time limit on it. I'm going to give you the prompt and you're going to go enter it in your own GPT type program. Even if you're not paying for the program, which you don't really have to do any longer for the most part. You can get away with the free stuff almost always now. All right. We go back in and grab the S&P 500 and let's go take a look. We'll go over to 101.2. There we go. Moving averages. Yeah, I was waiting for someone to comment on that. Brenda said, hitting the sauce early, are you? I don't know if you guys can read it. Mountain Valley Water. Okay. I have stopped playing around. I mean, we've got a great filter. We've got a great filter. It does a great job, but I did a lot of drinking out of plastic bottles, and with everything I've learned in the last couple of months on microplastics, I do everything I can to not touch plastic anymore, even my fingers not to touch it. when they're finding newborn babies having plastics inside of their blood, there's a problem. It's already transferring, which means it broke the blood-brain barrier, right? And it's transferring from mom to baby. So everything is glass, which is why these bottles. I would gladly drink Pellegrino, except bubbly, not good when you have to talk a lot, right? Too much. Excuse me. Excuse me. Right? Like the Oompa Loompas. So we look at the S&P 500, and guys, when we did our Trader Super Summit on Friday, we spent a bunch of time looking at the S&P, the VIX, and the Nasdaq on Friday. And I talked about this day right here, which was that wasn't Friday, that was 17. Yeah, that was Thursday. Yeah, that was Thursday. So we spent a lot of time talking about this day here, and even then 2 days prior, that Tuesday, because my phone, I've deleted the message now, but my phone lights up when the market is in the condition it is, this bullish turn, move that we're making here. And then we get a bearish day, and I get these, oh my God, messages. Is this the end of the world? Do I need to go to gold? Get out of the US dollar, right? I've got my passports to other countries. Should I leave now? The answer to that may be yes, no matter what. That may be the right answer for you. But listen, we were in a bullish bias on that day. On Thursday, the end of day, we were still bullish, right? We stretched up to a freaking all-time high. Come on. And that was the problem. We hit the all-time high and then we backed down immediately. It's like, oh my God, what's going on? The bulls pretend. Yeah, okay. You really need to look at it. You really need to look at it with a very open and level head, right? So if you look at today, and I'm going to bring this in just so we get it bigger. Okay. I'm actually going to stretch it that way too. Okay. So you have to ask yourself the questions, what's going on, right? Where did we open? That's the first question I want to ask. Where did we open? We opened right here. I'm just going to do it on this side here. We opened right here. Okay. That was our opening price. I don't know why this changed colors and tools. I can't use that color. It matches with fibs. Blue is a more better color. So let me just get rid of it and do it again. All right, there we go. All right. So we opened right here. We stretched up. So who took control on the open? The bears. We gapped down, right? The bulls then ran it up. And then we stretched it all the way down here. Bears are in control all the way down. And we've moved back up. Right now, the bears are still in control, but the bulls are trying to take it back. And that's the conversation in your head, whether you do it out loud or to yourself. That's the conversation you absolutely have to have with yourself over and over and over again throughout the course of the day. What's going on now, right? So up till today, we were riding up along. We got nowhere near the 8 moving average at all. Today's the first day we hit it. Not only hit it, we broke through and we pierced through. So am I in panic mode at this point? I'm in position 3 in the chair. I am all the way back here. Nothing that I'm fretting over on this one bit. None of this is saying, oh my God, the world is coming to an end. Right now, we've got a lot of mess up here. And when I say mess, we're playing around on this fib line, with all-time high, right? It was an all-time high here, and then here, and then here, and not here, but here, right? And so we had all of this happening, and we just need some breathing room. You could go and do a 440 dash, right? And you watch, right? The thought of cool down, when you run as hard as you can for that 440, and you get to the end of that line, you stop almost immediately. You ain't running forever. So I need to cool down. You need a break. You need a rest, right? Well, so does the market after the run that it's had. They need a rest. And this is the rest. And the bulls and the bears are going to continue to fight over and over and over again, attempting to figure out who's going to take control. But for me, my bias is on the bulls because of what the market is doing and because of what my moving averages are still spreading out. We're getting bigger. So there's nothing telling me we're going down, but keep something in mind. I could tell you every day, watch, I could say, I think we're going up. I still think we're going up. I think we're going up. I think we're going up. I'm not worried about it. I'm not worried about it. We're going up. We're going up. I'm not worried about it. And the next day we could do that, right? And open on the downside. It's going to happen sooner or later. Sooner or later, we're not going to go up any longer. We're going to go back down. But you can't look at it as, well, what if I make the wrong call for tomorrow? Because look at all the wrong calls you made by doing nothing in here. That's the wrong call. The right call is, what's the market doing? Is there a way for me to capitalize on it? When the S&P runs up and you're getting in here and you're getting up to this resistance level and you go, all right, I know Fibonacci levels are powerful. So you know what? I'm going to pull my stop out, my target out, and I'm going to put a trailing stop, or let's say you had a trailing stop, but you tighten it up there just in case it backs off. You don't want to miss out. You don't want to give too much money back, right? That's the power of being able to analyze this one day at a time and making your ultimate trading decision based on that. There are going to be days that you get into a trade and it's going to do that. And there are going to be days that you get into a trade and it does that. I don't know which day that is. But you know what? I can guarantee you I know what day this is. It's the day you didn't do it. It's exactly what it is. It's the day you didn't do it. It's the day that you decide, well, and I'm not saying you have to trade every day, but you've got to analyze that market and you've got to have a system that you trade. You've got to have a system that you trade overall. It's critical. Let's see. So, oh God, really? Will? I get that. Will just typed in it's an inside joke because you guys run in Trader Super Summit. Hopefully you'll be there next year, guys, in either our mastermind or inner circle. It's phenomenal training. But I get these questions all the time. Should I buy calls? What should I do? What should I do? What should I do? Will you manage my money for me and so forth? Without going into the entire story. Will said the 8 moving average from Friday's close is about the same as the S3 pivot where the S&P pulled back to. Okay, good to know. Well, I don't have my pivots open right now. Yeah, haha, I love it. This is the day you didn't do it. Make a t-shirt. Yeah, exactly. Exactly. My wife would kill me if I made another t-shirt up. I think I have 30 different trading shirts upstairs in my closet. It literally takes the one rack of my closet up. Yeah, she would go nuts. I have to throw one away and I won't do it. But the point behind that was you've got to trade. You can't look at it and say, I'm too afraid. Then do paper trading, but you have to trade. You can't not do it. Right? You can't. All right. So good job on your trades today. Much appreciate that you entered them in. Let me bring this back out a little bit. We don't go that far. I want to get the whole fib on there. All right. So we're looking at the S&P 500. Let's talk about targets and where we go. Downside, of course, is the 8 moving average, the 57.96, which is this next fib line down here. We're playing around that 58.48 now, or 58.54 now. And then we've got the 59.17 and the 59.34. Right? That is the ABC pattern that I drew as our resistance. So somewhere in that blue zone, I think we're going to see some decent hesitation in there, maybe even a decent pullback coming in off of that after we had a 100% growth. Am I guaranteeing it goes up there? There's too much going on. There's too much with the elections right now. There's too much with what's going on overseas, with external wars between Israel, Ukraine, what's going on in China, and just there's so much. Are we going to be in another war in the Middle East now because of what's going on with Iraq and this and that and the other? You know, I don't know, right? Who wins, who loses? Part of the training I did over the weekend was how to trade into the election. And basically it wasn't the election, but what happens after it. And historically, how do markets tend to move with a Republican winning, with a Democrat winning? And then I did it based on policy and so forth. And it wasn't me that came up with all these answers. It was someone that the person we call the economist in my mastermind group. Has a lot of this, and he teaches on it. That's a regular shtick for him, is to teach on the economics of it, of why. And everything that's going on with all of this, so close to the election happening now, interest rates right now. I mean, Trip, can you tell me, or can someone tell me what's the percentage of a quarter versus a half point increase for the upcoming announcement? Because from what someone told me it last week, I never went and checked it, but it seemed very high. But it was more favored to the half point cut. And if we are going to see another half point cut, I don't think that bodes well for telling the market that the Fed is doing knows what they're doing. Right? Because we wait. Should we cut now? We're going to wait one more, and then we drop a half. If we drop another half now, it just shows how poor of a job we did. Yeah, if anybody can get access to that, I just want to spend the time to go find it now. That would be great. But right now, you got to look at all of these components together, and they're causing turmoil. Right? Is there really a reason to cut? You got to cut and cut and cut and cut. The goal, right, of the Fed is to keep inflation down, right? You raise the rates because inflation's going up, right? You're raising rates, you're trying to get inflation down. People spend less money, higher rates, they can't borrow as much, they spend less money, inflation comes down, supply and demand gets better, but then you see unemployment start to drop. So right now, there are a ton of people that just cannot afford to buy a house at these interest rates. Someone that I am very good friends with from another part of the world in the US deals with people that are doing refis all the time. And he does some notary stuff. And he said that he is seeing more refis in the last 3 months than anything else. New mortgages, he sees very few. Refis, he sees a ton of refi. A ton of refi happening. And he's a software guy, so he's got multiple people using the software and that he does and so forth. So when you look at interest rates, people just can't afford to buy the houses, right? I mean, I was shocked. I got my property tax, my insurance bill for a piece of property we own in Florida, and they dropped my rate by $120 or $180 or something like that from last year. I was elated. It's like, oh my God, really? We went down? I pulled last year's bill to make sure that I wasn't wrong with what I remembered it to be, right? So is there a reason to cut rates? I think rates are still too high. It makes it harder for businesses and so forth. And it really comes down to, and I've done in Inner Circle, guys that are in here that were back from the beginning Inner Circles we did. I did a training where I taught on economically what had happened, with the last big rate hikes we had, and then markets dropping, crashing from it, and the likes. And you have two different systems out there. You're going to draw your own opinion of what works better or what doesn't, right? There's a top-down system and there's a bottom-up. Top-down says give the money to business and let it funnel down through. They'll build more factories, they will hire more people, and it's better for the overall economy. Bottom-up says give the money to the individual and let it funnel or trickle back into the economy from the bottom up. Well, when you give the money to a business, they're going to buy a new building. So they're putting money into construction, which means the electrician, the mason, the plumber, the contractor, the whoever, the laborers are all going to get money. And what are they going to do with the money? Then they spend it everywhere in society and pay for everything that they use. When you give it to individuals, when you do the bottom up scenario, you give it to the individual, the money gets spent, but it doesn't have the level of touches, in my opinion, doesn't have the level of touches that it does if you give it to the top down. And once again, you're going to draw your own opinions to whether you think it's right or wrong, but go back and look at some of the historically. I need to pull it. I got to pull the document. And it shows that what economic stance was taken to handle that drop in the market and how we overcame, and all of them in the late 1900s, all of them into 2000 were a top-down approach, right? We're talking well, not even pre, I was going to say pre the housing debacle, but what did we do? We did QE, right? Quantitative easing. We did QE1, QE2, billions and billions and billions of dollars. We bailed out companies that were going out of business, right? Literally, the government bought them. The government lent money to businesses like GE or GM. So I don't remember which was which. It was either GM or Ford said, we're not taking your money, because they had to give shares to the government as backing. And one of them, which I think was Ford, I don't remember, said, yeah, you know what, we're not doing that. You're not taking that. And in reality, the US government broke the law, because they're not allowed to hold ownership in companies, and they did by taking shares. They broke the law. But that was a top-down approach, and that's how most every one of them have been, a top-down approach. You give the money to the individual, it's usually squandered, right? It's not spent on, okay, we're going to go build a new factory, which has long-term effect. When you go and buy a pack of gum at the store, that's not a long-term effect. You paid Wrigley's, they're $2, you got your pack of gum, and it's gone in a week, right? It's not, you're not going back and buying another gum now with more $2 because the government gave you more money. It doesn't fester from there. That building is built, the contractors and the likes all made their money, but now there is an output from there that comes from it. It's I am not the expert. The economist is, right? And people like that are the ones that I listen to when they say, these are the approaches we want to see take place. So, Tripp put in, there's an 85% chance for a 1/4 point cut. Okay. All right. So it's definitely the info I was given last week. That's why I said was wrong, because I had gotten like 65% for a half point cut. But if we drop a 0.5 point, I think it's going to be a very poor message to the world, right? About us. I mean, we're already on shaky ground with everything that's going on. Listen, I'm all for fair wages, right? All for it, every bit of it. Everybody should get paid. I think there are way too many industries that are underpaid. I think teachers should be paid $1 million a year for what they do. No ifs, ands, or buts. The thing is, someone has to pay for it, right? And if you're fighting for that higher wage, remember, you got to agree, then everything goes up, right? It's just costs go up, prices go up. It's just going to happen. Barry said, in 1980, when we bought our house, the interest rates were 12%. 6 months later, they went up to 16%. Yeah, Barry, I remember that with dad, with my dad, and every week, people are buying houses, and literally you say, okay, we're going to buy a house. You go to get your mortgage. You didn't sign the document and lock your rate, and next week you're a 0.5 point higher, or a 1/4 point higher, depending on what bank you're with. It could be a point higher in a week or two, right? It was just crazy what went on with that in the past. So I agree. And right now, we bought our first house, we were at 6.5%, right? We financed it like 5.5 or something like that, and then paid off a 30-year mortgage in like 14 years or something. I wasn't keeping a mortgage. My accountant still to this day gripes at me for paying it off. He's like, you're nuts. You should not pay it off. Better off keeping the debt. Maybe. The thought of giving all the money to the mortgage broker, the bank, irked me. So, but I did find out that after the fact, though, there are ways to go back and I forgot the exact term. I'd have to ask my buddy who's a mortgage broker. But if you are planning on making big payments off on your mortgage, you can go back to the mortgage broker, the bank, you pay a fee, a couple $100, and they revisit your loan, and then they make adjustments to the payment schedule, because all that money you're going to pay up that you just paid up front, you want that to come off. You don't want it to come off of the end. You want it to come off of the front, right? Off of the balance. And many times they take it off the end. So you got to look at where it pays it down, because you still have a higher interest that you've paid if you don't tell the bank to reassess. If anybody here's a mortgage broker knows what I'm talking about, type it in. If you don't redo the data, redo the mortgage or a review of it, and they restate something, then it costs you a lot more money that way. Yeah. So Jeff said it was Ford that didn't take it. That's what I thought, Jeff. I thought it was Ford. Is it reamortized, Tripp? Okay. I don't remember that term, but that may very well be it. I just don't remember. Barry said, that is exactly what happened to me. I was getting cold feet early in the year, and the realtor said rates were going up. Sign now. I signed, and a week later, the rates had gone up another 0.5%. Yeah, it's crazy. It's crazy. Now, we're not dealing with that right now, but we are dealing with the fact that housing has slowed down. It definitely has slowed down. Let me rephrase that. Existing homes have slowed down. Home builders have a way to incentivize you to buy. They can kick a 1/4 point or a 0.5 point off of a mortgage, or throw in all this stuff, not tchotchkes, not hats and t-shirts, but they're going to give you a bigger lanai on the back of your house, or you're going to get 3 bathrooms, or an upgrade of the tile or the windows, or whatever. Okay. Free cable for life. I don't know. But they have ways of doing that where mom and pop, that I'm 75 years old, I own a home in Florida, I want to sell. I can't because I can't incentivize people, right? Not to mention just Florida is insane right now with what's going on. So short, when you look at Florida, short story on it, my daughter's in-laws bought a trailer home in Florida right in the wake of the hurricane. They had not closed yet, and their house is totaled. So they're out of the contract because the owner's not going to fix it. They're just going to file it as an insurance claim and get the money from the insurance since it's totaled. So they're not going to go and fix it and everything else. And, you know, my daughter's in-laws are not going to wait that long to get it fixed. But the hurricane came and destroyed their entire house. I saw pictures of the roof was it just curled it over like a can of sardines. All right. So stop making trading so damn hard. And you can exchange the word damn for any freaking word you want. Okay? But I see it all the time. We are making this so complex. Stop trying to play hockey and soccer and basketball all at the same time. They have absolutely different rules, right? They're not the same game. They have different players, different rules, different criteria. And first thing is make sure you're focusing on a system. You can pick the strategy. The strategy is covered calls as a strategy. The system is my strategy creation system, identify, enter, manage, exit. That's the system for it. Okay? How do we do that? That's the system that you've created. Make sure that you are focused on one systematic approach. Oh, but what if this happens versus that happens today? I don't mean bullish versus bearish. But if you're going to trade directionally, you're going to trade calls and puts, your signal should be the exact same. They should just be upside down. If my signal looks like this for a bullish trade, move up, retest, and bounce. For a bearish trade, it means drop down, retest, and bounce. That's it. Or drop instead of bounce, whatever word you want to use. That's all it is. We're making it too darn hard by trying to build in and incorporate these massive series of rules inside of your trading. And I'm not saying you shouldn't have a rule-based system. You should. You absolutely should. I'm hoping in a couple of weeks to share with you guys a sheet that I'm going to make up. We're just going to we'll put it on the website somewhere. But it's going to be a checklist, right? For an options trader, directional options trader, it literally would be a checklist. Take it, print it out, laminate it, and use a grease pencil on it, and check off with the grease pencil everything on there to say, okay, this is what has to happen for me to take this trade. Right? I mean, that's it. I mean, it needs to be that simple, right? When the pilot walks around the plane with their pad, right, and they're doing their check, right, their checklist before they get to take off, and they say, okay, do we have wheels on the plane? Yes, check. Okay, the wheels are good. Did we fill up with gas? Yes. Is any leaking? No. Okay, good. Right? Get back in the plane. Does the door close? No. Okay, we'll leave that and come back later. No. You stop right now. The door doesn't close. You ain't going anywhere. You're not going anywhere. And I know I had it happen where a door didn't close and they had to fly a part in from Atlanta to whatever city we were in to get the door fixed. We were there for hours waiting to get the door. It literally would not close. And there were idiots on the plane saying, can we tie it? Yeah, that'd be a good idea. Tie it with string. Let's see whether it'll rip out with the air capture pulling it out without a locked seal. But that pilot goes through that checklist and says, that's it. If we can't fix everything or everything doesn't work, we're done. We're not going any further. We're done. Right? That should be the same with your trade setup. If you're going down the list and you're picking out, this is your candidate, this is how you're identifying a candidate for your list, and you can't fill all the check boxes, that candidate doesn't work today. Pass, go find somebody else. Oh, but Rob, I looked at all three of my candidates today and none of them worked. Well, okay, then don't trade today. Look, do I still have it open? Maybe. Let me see where it is. Okay. Oops, I know. I got to escape. You got to get rid of the drawing tools. We'll only bring it on the screen with those there. All right. So watch. What I did is I've hid all of the trades that didn't happen, that didn't work. I hid all of the trades on high. I hid all of those because it's getting too big of a page. All right, but look at this. All of this, That was 9th, 10th, 11th. No trades went off on those days. Well, actually, that's not true. We did have one go off on the 9th, right here. That went off on the 9th, right? These 8 did not go off. So what does that mean? It just means we didn't have a trade that day. And that's okay. That's okay. Here's, you look here. 17, 17, 17. Nothing, honey. Right? All or no's. All or no's. There's still some, I just realized there's still some fields missing in here. Yeah, there we go. Or not, right? So Microsoft was a no from the other day. Okay. So when you're looking at the market and saying, okay, do I want to trade? Do I not want to trade? You should have a series of rules. But those rules have to be do or don't do. Has anybody in here ever? Yeah, there you go. The great word next. Exactly, Will. Next. Next. Get really good at saying next. Right? Does anybody here ever done a cold plunge? Has anybody ever jumped into that 45, 48 degree tank of water? Just dove straight in. Right? And I don't mean head first. That would be bad. That's not smart. Right? Okay. Yeah. Will said, yes, I hated it. Got a couple of yeses. All right. And so how good does it work if you stand on the side of the tub going, all right, it's going to be cold. So I got to worry that my fingers and my toes and I'm going to shiver so much. Am I going to be able to hold my breath? If you are thinking about it, you will psych yourself out of doing that without a doubt. Right. Don't think, just go. Right. I've never done the cold plunge. I want to. I've never done it. I don't want to buy a tub for here. Living in Long Island, it wouldn't work. I don't have a place to put it inside the house. I'd have to get rid of a table saw or something, and that won't happen. So garage doesn't do it. It's not heated, right? So it has to be outside, right? It gets to below zero in the winter at times here, so not really good for me. So I do the cold shower instead. I get it. It's not the same thing, right? But that first day I did it, I didn't last 5 seconds. Go freaking out. I was hyperventilating from being so cold on my back. Right? And I shut the water right away. Now I could do 6 minutes, 7 minutes. It doesn't matter, right? Now, but it's getting colder outside. I know the water is colder than it was in the summertime. Tony Robbins is the one I saw talk about this. Said you can't think about it with the cold plunge. You just have to do it. Just get in the tub and just do it. And when I'm done with my shower and the last thing was done, I immediately turn around and go to full cold water. I don't even say a word. I don't hesitate 1 second. I just do it. Right. I've done this now every single day, with the exception of when I was in Mexico for a week because the water was lukewarm at cold. I've done it every day since early in June. It's one of the best things you could do for your body, Brenda. You will have an energy rush for hours. It'll continue to burn what's called brown fat, literally for hours. It should be like the first thing you do every day, right? Just get out of bed and jump in it. You could watch people like Mark Wahlberg talk about it, Tony Robbins, Gary Brecka, Dave Asprey, Huberman. Some of these guys are legends for their health contributions of what they've come up with and what they do, but it's amazing for the body. I feel great after it. I feel terrible without doing it. Here, I'll tell you exactly this, guys. If you have a problem sleeping at night, right before bed, get in the shower, turn it as hot that you can possibly stand that shower for 30 seconds. And then for 30 seconds, go to full cold, dry off and go to bed. It will literally shock your brain to move it around my wife did it because she has problems at night sleeping sometimes. My wife did it one night and she slept like a baby that night. So do you exercise first to warm up your body first? I don't do the cold shower first thing in the morning, Barry. So mine comes right after a warm shower, but no, these guys are saying you do it right out of closed eyes, wake up, jumping. First thing you do, get in the cold plunge. It just triggers your body that way. My daughter wants to do cold and then hot. No, that's the wrong way to do it. Don't do a sauna after, do the sauna before if you can do a sauna. So guys, don't make it hard. You need to simplify the who, the what, the where, the when, and the why. Start duplicating or documenting rather your process. Duplicate what I do as far as strategy creation system. Take 4 words, identify, enter, manage, exit, write them down, and then come up with criteria for all of those. What does it take to identify a candidate? What has to happen? I'll tell you, for me, in most cases, it's pretty simple. I want a stock that's trading between 100 and 500, let's say. Okay, that's my price range. I want to have at least 1 million shares of stock traded per day on it. And I want weekly options available. That's just to make it to my list. That's my list gathering for that day, right? Okay, this is what I might get to choose from today. Now I need to see a stock closing near a fib line. Ideally, we have a bullish bias, opposite if you're bearish, but we have a bullish bias with a minimum of a rank of 2. So meaning I want a 2 or a 1, I'm not looking for a 3, right? And then once that pattern is there and we get a retest and a bounce, that's my entry. So identify and entry, right? That's what it takes. Pull back, bounce. I want it to be this far away. I want it to pull back at least to within this distance. Here's my support. I don't want to be $8 away and it's okay, I'll take the trade there. I want it to be within, say, $1, okay? I want it to pull back within $1, bounce, and I'll take my trade off of the bounce. If I'm wrong, I'm at the closest I could be to minimizing my risk because I'm closest to my support level by taking that bounce off of there, right? So big fan of it. So identify, enter, you do the same. How are you going to manage it? How are you going to exit it? Don't make it hard. Just if your system is simple, make it simple. You don't have to write long dissertations, right? But you do need to have it documented, right? It's too crazy to deal with it just in your head because I used this example the other day. When it comes to men as traders versus women, well, when you look at the order, how about we do that? When you look at the order of who makes better traders, it's kids, they're the best, women, and then men. Now, that doesn't mean every kid is better than every adult. That's not what that means, okay? Or every woman is better than every man. But the kids have no inhibitions. They haven't given this pre-built fear and guilt of what's going on, right? They're good at video games and the likes. Women have the unique ability to leave the door between left and right brain open, just a crack. So information can still freely pass back and forth. For men, our door slammed shut. We got nothing going back and forth in there. Done. Okay. So it's I used to do this in front of the room. It was a lot more effective, but why are you doing this trade? I don't know. So don't do it then. I have to. Why? Because I can't stop. And you have absolutely no freaking idea why you're doing it, and you do it, men particularly, right? And then the trade is over and you go, what the hell? Look at the signal. I knew that. Look, moving averages were nowhere near this. We've been falling like a rock all day. All I looked at is with the last candle, blah, blah. The market's down 200 points on the S&P, and I took a bullish entry. It was easy to see after the fact. But when you're in the midst of it, nothing, honey. Nothing. All right? Don't make it so hard. Don't make it that difficult. All right? And yes, if you have a cold plunge, go for it. I'm telling you, you'll love it. If not, just get used to doing 3 to 5 minutes in a cold shower at the end of your shower. Don't warm up with a shower. Let your body warm up naturally. That's the idea behind it. It's shock proteins that you're causing in the body. All right. All right. It looks like we're right at 1 o'clock. So don't make it so dang hard, damn hard, freaking hard, whatever word you want to put in there. Stop making this a difficult process. Get your rules in place. Follow the rules. Trading isn't hard. It's not. Yeah, there you go. Happy trading, Brendan. You got it. All right, everybody. Hey, we dropped a link in earlier to, if you like it, then you should have put a fib on it. It's a famous Beyonce song. So go ahead and get registered for that class. Have a great rest of your day. God bless, and I will see you all at our next one. All right, take care, everyone. Bye for now.